If you're looking at buying a home in the next 3 months, I'll show you exactly what steps you need to take to make it happen without the stress and frustration. Let's dive into a foolproof 90-day home buying plan. So why would you listen to me? I'm Kevin Polakovich. I've been in the mortgage business for over 20 years, and I've helped probably 7,000 people buy their home and make it an awesome process. My goal with this channel is to help you with all things related to home buying, real estate, and personal finance. If this interests you and have added value, I'd ask you to subscribe and follow me. A lot of times people without a plan get out there and find a shiny object, and that shiny object is a new house. And then they're in reaction mode trying to figure out how to pay for this house. Can they afford it? Do they have the correct amount of money saved? Can they afford the monthly payment? So to really take a look at this before you go out and look at the shiny object is really a key to success. 90 days out, couple big questions I think you need to ask. Do you want to be an owner or do you want to be a renter? Are you interested in long-term building equity, in building wealth, or do you want the flexibility of just paying rent? There are some advantages to just flexibility of paying rent, but when you look at the statistics on wealth and wealth creation, owning your own home is a big piece to that because you're able to gain that appreciation in the property, you're able to pay down debt, and you're not just paying a monthly fee. If your decision is, I want to own a home, my opinion is one of the first steps to do, have that conversation with a mortgage professional way ahead of time. The initial process when we first meet someone is probably 10, 15 minutes on the phone. A lot of other people in the mortgage business like to send some clunky online application, hey, fill this information out and put this all together, and you're just a form and you're just a number. I like to start with a phone call, and I like to start with a phone call 10 to 15 minutes. I want to talk about what are your goals? What is your comfort level for a monthly payment? Where do you want to live? What's the driving motivation? Is it a fenced-in backyard for the dogs? Is it a school district for the kids? Is this something close to the highway to commute to work? Is this a 3-year house or a 10-year house? Is this a second home? Is this an investment property? What are your goals? Those are the things that you find out on a phone call, talking to a real person like me, instead of filling out something online. So the first piece is that phone call. After that initial phone call, our next step is to do a face-to-face meeting. And when I say face-to-face in today's world, it's a Zoom meeting. It's us getting together with actual real numbers. Let's build a budget for what a house at this price point looks like. Let's build a budget for that little house with the fenced-in backyard. Let's build a budget for that school district that you want to be in. Let's build a budget for an investment property or a second home or your dream house or whatever it is. So it's about 30-minute Zoom meeting. Clients can do it from sitting in their home, and we're going to go through real life examples and give estimates for about how much the down payment's going to be, about how much the payment's going to be, about how much they're going to need to bring the close, whether that's a zero down program using a rural development loan or a zero down program doing a VA mortgage or a small percent down conventional loan or a loan that they've got a giant down payment to put down, really putting numbers together that they're going to be able to get a real comfort level and feel empowered when they find the right house. They know very close idea of what the numbers are going to be if they choose to go under contract and buy that house.
One of the things that clients always walk away in meeting with me is to get a good idea of what things you're going to look at. What's my monthly payment going to be? What's the interest rates going to be? What's my total cash to close? Not just my down payment, but what else is out there? What are closing costs? What are setting up escrow accounts? Everything else. Every time you meet the client, they're going to walk away with an Excel spreadsheet that they're able to fill out on their own. And what I like about that is when you're looking at a home at 10 o'clock on a Saturday night, you just got watching a do-it-yourself show and you get motivated and you find something online, you can go back and plug some numbers in, and let's just play at this. Let's say you're looking at buying a home with a 5% down payment, and we're approved for a 5% down conventional mortgage. We get into some of those details of different loan types, but a 5% down conventional mortgage. Mortgage interest rates change every day. At the time I was doing this, the rate may have been in the mid sixes, might be upper sixes, might be lower sixes. But the great thing is you can play around and move the interest rates around. Millage rates in the market that I do a lot of my business in. I work in several parts of the country, but I've got a tax rate that gives a pretty good idea of what local taxes are in that market. But in this case, on a super high level, $300,000 house, putting 5% down, financing $285,000, got an interest rate in the mid sixes. We're looking at a total payment. This is a PITI payment, principal, interest, taxes, insurance, everything put together, about $2,400. And we'll go through this in great detail if you choose to get together with me and talk about a specific pre-approval, but this is something everyone walks away with. In addition to that, we walk through what are traditional closing costs for the part of the country you're buying a home in. A lot of the stuff is local. Different costs for title and closings and appraisals and whatever else. But generally speaking, in a lot of markets, we'll break it down based in your area. Let's say it might be $4,000, somewhere in that neighborhood. That would be for title insurance, to close, appraisal, a realtor fee, standard lender costs. When I talk about lender costs, everyone in our market is very similar in lender costs. So in this example, in this market, we would use something like $4,000. Next piece we talk about is putting together an escrow account. Every single month, when you make a payment of $2,400 a month, money's being saved for your taxes and your insurance and prepaid interest, a variety of things. We go through that in more detail when we get together, but in this case, let's call $4,500. So what this does is this allows our clients to walk away and have a real good idea of about how much is a payment going to be, about how much cash to close is going to be required. These aren't exact numbers. These are the probably, should be, most likely budgeting type numbers that we do in this meeting, but it is a fantastic tool for you as a potential homeowner to be empowered about what things are going to look like. I'd love to talk to you about some more. Get in my calendar, schedule appointments so we can see if it's right for you.
So everything that I just talked about there, from that initial phone call, getting together with me on a Zoom meeting, there's a good chance that you're going to find something on your credit report that isn't accurate. And if it's not accurate, that mortgage professional is going to have time to guide you and how to fix that or correct that information to put you in the best light possible. That mortgage professional is also going to be able to look at your total income coming in every month, as well as your debt. Do we focus on paying a couple things down? Do we focus on paying down some revolving debt? Do we focus on more savings? Do we focus on pushing a credit score a little higher? A variety of different things, but the advantage of having that conversation earlier is that you have time to make corrections to get you the best financing possibilities. So one of the questions I get asked a lot, how much of a house can I afford? And a lot of times clients are able to afford way more house than they're actually comfortable buying. Well, my thing I always like to ask is, how much of a payment are you comfortable with? What do you think the comfort level is for a mortgage payment for you? And I ask that question because the last thing I ever want to do is to put someone into a home that feels very constraining, that they can't live life because they're trying to make a mortgage payment every single day. At the completion of that is where the client is pre-approved. And when I say pre-approved, it means they are financeable. You can buy a home. You are qualified based on the information we collected, based on your goals, based on the financial analysis. We know exactly what you can get pre-approved for at that point. The advantage for you as a buyer to be pre-approved, when you're out looking at a home and you're ready to make an offer with a real estate professional and you make that offer, you have a pre-approval letter. What that pre-approval letter says, you've already gone through the processing. You are financeable. You are a good buyer. When we look at environments where we see 1, 2, 10, 15, 20 offers in some crazy cases, If you're not pre-approved, you're not getting past go. That seller of that house and that real estate agent representing them only wants to work with clients that have a high likelihood of closing. It's great they want to buy the house. It's great that someone wants to sell the house. But if financing isn't in place, it isn't going to happen. So that pre-approval letter insures you, insures your real estate agent, insures the other real estate agent, and ultimately insures the seller of the house that you're a real buyer. Hey, I know we covered a lot of information about financing and homes and everything else. I have a great resource I'd love to share with you. It's my personal budget. The link's below. It is absolutely free. I'd encourage you to check it out. Let's get back to the video. You've been pre-approved. You have a good understanding of numbers, of what monthly payments are going to be, what cash to close is going to be, all those things. Once you're to that spot, the next step is really to start the home buying process. My professional opinion on the home buying process is all buyers should have a real estate professional representing them. When you hire someone, engage someone to represent you as a real estate professional, they're looking out for your interests. They are working for you. They are accountable to you. Oftentimes, that agent is paid by the seller of the property. A negotiation happens back and forth, and that seller, the owner of the home, is going to contribute money to pay for your real estate professional. I think the advantage you get in having a real estate agent representing you greatly outweighs any other negative piece. When someone's looking out for your best interest, when someone's negotiating for you, for someone that's their only job is to help you get the house, I can't emphasize that enough. So to find that agent, interview them, and start the home buying process. What are we looking at? What's the area you want to be? What's our price point? Let's go look at some homes together. That agent will set up appointments for you to go out, visit a home. They'll walk through the property together. Once you make an offer, they will represent you to put together an offer to that listing agent and to that seller of that home. There's a lot of real estate agents out there. My advice is talk to some family friends. Talk to someone in your sphere that has had a good experience with a real estate professional. That's been always my biggest thing. Who do you know that has recently bought a home? Who do you know that had a good experience? Ask a few questions. Hey, you bought your house. How was the experience? Who was the agent that represented them? Would you recommend them? I think that's a great spot to start right there. The process I described was figure out financing up front, have conversations, get pre-approved, then go find a real estate agent and go from there. It doesn't always happen that way. If it did happen that way, I will tell you, your mortgage professional will have great agent that they would love to recommend, someone that they've worked with before. If you talk to your mortgage guy, they're likely going to have a recommendation for a real estate professional. Once you find that real estate agent, what will likely happen is they will put you on a automatic campaign that every time a home that meets your parameters pops up, it'll be sent to you automatically. That real estate professional will reach out to you periodically, see how the search is going. When you see something that jumps out, you'll likely email them, text, call, and say, hey, I want to go see this house. And that's when that real estate agent will take you to take a look at that house. And that search is better than something you're going to see on Zillow or something you're going to see on some of these other websites. Real estate agents are dialed into the multiple listing service that NMLS in a local market. So that local real estate agent will put a search together, but eventually once that house is found, you and your real estate professional will negotiate an offer, put together a written offer that you want to buy this house, and this is the price you're willing to pay, and here are the terms. That real estate agent is going to walk you through this. That real estate agent is representing you, is going to help you come up with what a fair price is. That fair price can be based on other homes that have sold in the area. That fair price can be based on their list price and based on what other homes have sold in the area. I think this is priced really well. I think we should make a full price offer. Or it might be, this house has been in the market for 90 days. I've seen other sales in the area that have sold $10,000 less, $15,000 less, whatever else. You'll come up working with your professional what you think a fair offer is. That offer will be in writing with the details of the terms. Once an offer is accepted, there may be some back and forth. The back and forth might be one day, it might be 1 hour, it might be the course of a couple weeks where you're back and forth on offer price, you're back and forth on terms, you're back and forth on possession. When are you going to take possession of the house? Are you going to take possession of the house immediately after closing? Or are you going to allow them to stay in the home for a little bit after? A whole variety of things. But once that back and forth happens and it's finally written and all parties have signed, offer, counteroffer, offer, counteroffer, fully accepted offer. Once that offer comes back, there's a couple things that'll happen. From there, if you chose to do inspections, you'll have a period of time from once you go under contract until that inspection is done. 7 days is typical, sometimes 3, sometimes 5, where you have an option to go in with a professional to take a look at the property, get a full report. At that point, you will say, yes, we've signed off on inspections, everything's great, or possibly there might be some negotiation back and forth after your inspector finds something. I'll tell you this, the inspector always finds something. No house is perfect. There is always something. You will have to make a decision. Is this something that's big enough that I will want to go back and reopen negotiations? Or is this just the kind of stuff you're going to be doing on weekends in your house anyway? So you'll have to make a decision on that. Hey, we're covering a lot of information right here. If you like the direction it's going and you want to learn more, I'd welcome you to join my monthly newsletter below. We're going to talk about homes, financing, all things real estate. It's free, not going to spam you. Maybe once a month you'll hear from me. Love to share. Once we have a final contract put together with a closing date, with the final purchase price, we know the exact municipality. We know exactly what the taxes are going to be. We know exactly what the interest rates are on this day. We'll have a meeting where we go through exact numbers, exact details. So you know exactly what your numbers are at closing and you can start planning for that. The typical time frame from once the offer accepted to closing is 30 days in many markets. Home inspections are not mandatory. In most cases, they're recommended. What is mandatory is an appraisal. So after meeting with your mortgage professional, after you decide on the loan program, after you decide on the down payment, everything else, and you get the mortgage process started, application process is started, we're moving towards probably what the 30-day closing window, the mortgage professional order an appraisal. That appraisal is an independent third party that's going to go out and look at the house that you're under contract. Let's say you made an offer for $300,000. That appraiser gets a copy of the purchase contract. That appraiser is going to go visit the house. They're going to walk through the house. They're going to measure the house. And they're then going to compare that to similar houses in the area that have sold within a few months. Unless you're buying in a condo complex where every single unit is exactly the same, each house is a little bit different. So that appraiser's job is to make these houses similar. Maybe one has a little bit better backyard, so they'll move the value up here, or they'll adjust. One has an additional bathroom or bedroom, or the kitchen is more updated. They'll come back with a number to come back with their professional opinion on what they think the house is worth. I also say this, that appraiser gets a copy of the purchase contract. And why I say that appraiser sees, in the case we're just talking about, someone who's willing to sell the house for $300,000. Someone else is willing to buy the house for $300,000. So oftentimes what they're doing is they're going and looking and say, is this worth it? Are there other sales that support that value? So that's what the appraiser does in the appraisal process. Behind the scenes, additional things are happening after the application. A title commitment is ordered. And what title commitment is, title company's job is to convey title from the current owners to you as the new owner. They're going to make sure that you're the owner of this property. There's no old mortgages out there. There's no old tax bills out there. There's no outstanding judgments or assessments. You will be the owner of that property. Title search is done at the same time as the appraisal, and at the same time the mortgage professional is underwriting your file to get a final approval. I will tell you that mortgage people are like a lot of other industries. There are great mortgage people and there's some not so great mortgage people out there. Reputation is a big thing. I will tell you personally, we close 99.9% of our clients after they get under contract. It is few and far between that after we pre-approve someone, after we put an offer together, that we don't make it to closing. Hey, great job. It was a lot of information. I really appreciate you investing in yourself and listening to this. I'd love to help you accomplish your dreams of home ownership, whether it's the first home, a next home, an investment property, whatever it is. Below is a link to connect with me directly. Please fill out the information, reach out. My team will set up a meeting to meet with me, and we're going to help you accomplish your home goals. Can't wait to see you on my calendar sometime soon.